Alrighty, it's still lunch trading. We've advised traders to make sure that they realize it's a very low energy type day, that the bias is to try to get to the half gap, which is at 80 and a quarter zone. Magnet is 75 and a quarter. Consider that as a guide directionally. Above it, market is trying to bounce. You can see a little channel that I've put on. The rain line just above us, 81 and a half. 80 area on the 5-minute RTH. And the bias is to try to get, I said earlier today, by the end of the day to get to the 80. Will it? Nobody knows. Target zone has become 80 to 82, we've suggested, by the end of the day. And failure by the shorts to take out the low leaves them vulnerable. Not expecting a big, gigantic push, but this is inch by inch. Range type trading. The 120 chart, I also said, seems to be an idea of resistance for now. So you can't just assume we're going to go get that 80 easily. And this is running into these moving averages is why I think it's a toss-up whether we get there or not. But that should be the bias for the longs to try to get to the half gap trade. And this is a 120 chart, and we can see green line is held. Yesterday's low is held, the pink line, so that's support for now. We know that. Pivot point held overnight. And currently, this is the fighting range that we find ourselves in. So by and large, very, very neutral. Slight bias for the half gap trade to close because that's a high odds trade. Truthfully, we've made mention before that we thought would get an inside day, that we could short morning after trend day, but probably would not break the low. That bias still continues because the pattern is playing out for that idea. Overnight, a retest would be right here, this blue arrow. That would be a retest zone of a break. So still fairly dicey whether or not we can actually get there or not, and we're at lunch, and we still have time for some swings. But as long as this support idea, this bottom of this green box, supportive, trying to get through the box, then trying to get to the next box, and then the third box into this zone and get to our 80 primary target. See if the market cannot take this out and get back into that 80 to, let's call it, 81 area. And anything above the 80 is good fortune. We said let's figure 80, 82 is the target zone. It's taken all morning to try to perhaps accumulate and try to squeeze. Just a very low energy type day, and these are the days that drive you crazy as a trader. And part of that is because of yesterday's range. They had, 2 days range in one day. So I went on the assumption yesterday was an outlier day, and that's why I thought that this would be a slight bias to the upside to close the half gap and the gap. And I'd said earlier, and a reminder for you, if you got to 80 to 82, be happy. Because it just seems like that's a chore today. And so far we've gotten, reasonable. We got to the 79 zone, but not much more. This may be a third time through trade if we do take out the 79, opening the door obviously to a little bit of a push. And we still have some trading time today, although I hope most of you will get some time to relax and start your weekend early. Tedious trading. And you can tell that just by looking at the size of the bars. Still lunchtime. Maybe we'll get a little bit more position squaring this afternoon after, well, sometimes the earliest I look for it is 1:30, but normally after 2:30, I would be looking for position squaring. And in the summertime, the idea is get her done, get your trade done early and go play golf or whatever. And I guess a day like today, holiday, probably the same idea. Middle trades are the hardest. Closer to the ends are easier in terms of your risk and reward. If you are playing for the half gap, then you may want to consider stops up. If you're obviously risking a point or point and a half in this type of a range, and you get a point or a point and a half, you want to make sure you get paid. Just too choppy.